Newsflash, investment knowledge can actually lead to better investment returns. I'm Jack Otter, editor of BARRON'S.com. I'm here with Brendan Conway, who writes our Focus on Funds blog. Brendan, you've told me about a fascinating study of people in their retirement accounts and who does better and who doesn't do so well.
Yeah, you know, Jack, it's an interesting study of several thousand people that was published by the National Bureau of Economic Research. And what they found was they studied how well people did in their accounts versus how much financial literacy they had. And
we're talking about 401k accounts?
Yes, exactly. And they quizzed people on, how much compounding interest would you get X, Y, or Z? Those old train going through the tunnel type questions.
Word problems.
Yeah. And what they found was that the people who scored higher on the quiz also had superior returns. And when they traced it back, what they found is that those people who scored high also had relatively high equity portfolio allocations.
The light bulb went off in my brain when you explained this, and I think what might be going on here is that they're not quite as risk averse. When you walk into this situation with your retirement money, if you don't know anything about the market, well, you tend to go for the safety of, the perceived safety, I should say, of, say, a bond fund.
That's right. And so one of the other findings is that the same group that scored high and also had high returns, they also did tend to have portfolios that were more volatile. And so one inference that the study authors made was that these investors understand that and they accept it just as kind of the cost of doing business, of building your portfolio. And they found that in the long run, the people with the high scores ended up with a nest egg that grew at a rate of 1.3 percentage points a year faster, and they ended with a total portfolio 25% bigger.
So it does stand to reason, more stocks over the long term, you're probably going to get better returns, albeit with that volatility. Mm-hmm. We should add the caveat that other studies have found that knowledge is not always a good thing when investing. People get overconfident, right?
Overconfidence is an issue, yeah. I mean, the markets do continue to confound investors and surprise even the pros. People think that they know more than they know. People trade too much, and that could be the undoing of even people managing billions of dollars. In fact, it often is.
Sure, that's the killer. I love my iPad, my iPod, so therefore I'm going to put all my money in Apple, and it doesn't always work that way. So it sounds like the combination of restrictions within a 401k, you can only have X number of funds, and a little bit of knowledge goes a long way. What about people who don't believe us? They're scared. They're tempted to go into this bond fund. Is there some kind of a middle ground for them?
Yeah, Jack, if you're scared, if you don't believe it, or if you just don't have the time to do the research, you can do worse than a target date fund, which is a target date fund, essentially, depending how old you are and when you want to finish, it will kind of move you along a path to have more stocks or less bonds if you're younger, and vice versa if you're older.
Literally, there's a date. So you choose, I'm going to retire about then. I take the Vanguard 2030 fund or whatever, and then that's what you got.
And it will do it for you.
Thanks very much, Brendan.
Thanks, Jack.